Well, thank you very much for joining us. I'm Marlon Bowling, your tour guide to the ag commodities, and we're going to go on a little tour here in just a little bit. I am joined by Brian Hoops of Midwest Market Solutions. He's in Springfield, Missouri. Brian, always good to visit with you. I appreciate the help here today, and I always like to visit with you because you have kind of a technical bent, if you will, when it comes to the markets. And I wanted to take a look at a couple of charts here on the soybeans. Wanted to take a look at the recent market movement here. And if you look at what's going on here in these charts right now, this is where we are today. So anyway, compare that. We had this sell-off that goes way up here about 2 weeks ago. So we had the sell-off. We're starting to bounce back today. You look back at all of this line of movement here. We have these moving averages. This thin white line that you see on the screen if you're viewing at home, that is a 21-day moving average. See how soybeans just kind of hover along that, and they really don't violate it much. And it goes all the way up here. Now we actually violated right there for a couple days, and then we're popping right back up above it again. If we take a little further back in time and go to a one-year chart, you can see the big move we've had. It's a really, really big move in time. If I get out of the way here, you can see this is where it all started back in August. So way back in here. This is a 200-day moving average, and when it crossed right there in August, it went up above it and stayed there, and it is still there. Look how much above that 200-day moving average we are right now. But if you look at the bigger picture, Brian, go back about 10, 15 years. Let's take a look. Wow, just to put it in perspective, this is where we are right now. You draw a line across, that's a long way back, but look at where we had the high back in, 2012, Brian? We have a long way to go. That was $17 and something back then. But this appears to be meeting resistance right here, also here, and here. These were in 2012, I believe. So, Brian, is that overhead resistance? Is that going to be tough to take out?
Well, I do like your charts, Marlon. They look really good. It is going to be a resistance point for the market to get above. And of course, all these bull moves are started by fundamentals, and they're driven by fundamentals, and they'll continue to be pushed higher by the fundamentals. And until we find that top where we're rationing demand, that's a fundamental that you're closely watching. We've seen China come in as a buyer of corn aggressively this morning. Last week, they were buyers of soybeans, and there's more rumors that they're buying more soybeans and selling those from the United States as they're not able to get beans out of Brazil. So this is a fundamental that you have to watch, that we're probably going to push through that overhead resistance that you were talking about. And another fundamental factor will be how many acres we plant this spring and if we are able to refill these pipelines. If we don't get enough acres bought, prices are going to have to stay high enough, long enough to try and ration that demand. Otherwise, we risk of running out or significantly damaging our demand profile here in the United States if we run out of soybeans to sell.
So they are hanging right in there. March soybeans now 28.25 cents higher at 13.71 3/4. Big rally there. If we go back to corn and take a look at what it's doing, remember we had the overnight export sales announced today of almost 1.5 million tons of corn. 1.3 some million tons was sold to China, and then another 100,000 tons plus was sold to unknown destinations. March corn. Now it's starting to get its second wind again, and we're up 15.75 cents at 527.25 after a low overnight of 508. What a move. And December down 9 higher at 443. Let's catch the wheat and go to Chicago wheat first. Right now, the March up 15.75 at 664.25. And Kansas City also having a big move today. Let's look at March. We're now 16.25 higher at 643.5 per bushel. And on the Minneapolis wheat, you have the March contract currently trading 14 cents higher at 640. There is a lot of talk among the trade about the fact that the wheat, if nothing else, it is being supported by the tax information being released by Russia. They're going to raise their export tax in March, but it also has to keep up with the corn market as well. So it's something to keep in mind. Brian, we'll pause right here. We'll come back and we'll take a look at that livestock trade next. Well, let's go back to Brian Hoops, and he's with Midwest Market Solutions, and we'll take a look at our livestock trade. Here it is Tuesday, Brian, kind of early in the week. I know they're assembling show lists right now for cash cattle movement in the country. Have you heard anything shaking loose yet or not?
Yeah, the show lists that we've heard put together are smaller than last week by about 5,800 head. That's a supportive feature for the cash. Of course, you've got a snowstorm moving through a large portion of Nebraska and southern Iowa, northern Missouri. That's going to kind of disrupt some of the cattle feeding regions enough to see us push to contract highs this morning in the February contract. So overall, we're looking for a stronger cash trade this week. You look at the boxes and what they've done over the last several weeks, really supportive, really strong, and tells us packer margins are improving enough that they'll likely have to pay up for cash markets. I can't imagine the feedlots will take a steady type market this week. They'll just hold on to them for another week if they have to.
Okay, that's a good point. Yeah, we wondered how much impact that wintry weather would have and how widespread that would be, but it does sound like maybe a couple more storms in that pipeline coming out of the Gulf of Alaska. We'll see what kind of track they want to take. Brian, let's look at the current futures trade with our quotes provided by Bar Chart, and we have February live cattle 62 cents higher. We're now at 117.15. We have April 7 higher at 123.02. So it's not a big gain in April, but it is on the plus side. June is 37 cents higher at 119.20. Remember, we had the cold storage numbers that showed an increase in beef inventories. We had March feeder cattle. They were coming back from earlier pressure, and then they almost got back to unchanged, and then now we're selling off again for the second time. So currently, March feeders are at 142.97 per hundredweight, and that would be down 87 cents again. So now we're off our earlier high this morning by about 85 cents. The April contract down 65 cents at 145.60. As Brian was saying, nothing going just yet for cash cattle trade in the plains. Asking prices are running around 114 per hundredweight. Lean hog trade is mixed. February down 45 cents. We're at 70.17 per hundredweight. But all the other months are higher. We have the April contract 37 cents higher at $77. Brian, how much traction is this market getting from African swine fever in China again?
Yeah, you're getting a little bit of support for some of those deferred contracts from that news about China, but we're also getting into some major overhead resistance. This is on a weekly chart anyway, a point where producers may want to look at laying off some of that risk in those front 2 months, February and April, let those back months try and work their way higher as well.
Well, good stuff. Thank you, Brian, for joining us today. Brian Hoops, the president of Midwest Market Solutions, with us today. Tammy, with that, I'll turn it back to you.